least we calculate on 2 years.
No, no, 2 years is not good. 2 years, you cannot be able to get any good trend. 2 years, you cannot be able to get any good trend. You know, for the banks, for example, if you get hold of one of their annual reports, one annual report gives you 2 years already. In fact, any of the organizations. So it gives you 2 years already because, you know, as accountants, we don't only report on the current year, but we report on the comparatives. So if you have two books, two annual reports, you're already gone. You're already good for 4 years. 2 years is too short. You cannot be able to give any meaningful report on 2 years. Okay. Okay.
Yeah, it's okay.
Yes. So let's move. We're going to look at this question called CAMS Company Limited. Okay, CAMS Company Limited. I think this is already on the handout that was given to you. So in case you have not got it, please try and screenshot it so we can be able to use it to answer our question. Okay? So we have to move fast because today I want us to finish by 5 o'clock so that people who are having other classes can just join their classes without any problems. Okay? So screenshot it quickly, we move. So this is the last part. Yeah, this is the last part. So I'm going to read it as we go along. CAMS Company is an innovative, high technology company which has recently completed the development and the testing of a new product called Fentiga. The development of the product has cost $500,000, and the company has also bought a machine to produce the new product costing $175,000. The production machine is capable of producing 1,500 units of Fentigas per month and is not expected to have a residual value due to its specialized nature. The company has decided that the unit selling prices it will charge will change with cumulative numbers of units sold as follows. Cumulative sales units, 0 to 1,900 units. Cumulatively, the selling price per unit in each of the bands will be like 120 in a band of 0 to 1,900. From 1,901 to 4,900 cumulatively, the selling price per unit is 90, and so on and so forth. The next table, based on these selling prices, it is expected that sales demand will be as follows. So this table is talking about the units, the sales demand. Sales demands and is per month. Okay, so you have months 1 to 10. Month 1 to 10 is how many months?
10 months.
Is it 9 months or 10 months? 10 minus 1, 9. 9 months?
8.
Huh?
8.
8 months. Eight months. Who can help me? Month 1 to 10 is how many months?
10 months.
Oh, 10 minus 1 is not 10. 10 minus 1 is 9.
No, but both one and 10 are inclusive.
There you go. Very good. That's what I want to hear. Both 1 and 10 are included. You know, some students will just minus this. Okay, months 1 to 10, 10 minus 1 is 9, 9 months. Months 11 to 20, 20 minus 11, like that. Common sense. If you say months 1 to 10, that means both months 1 and 10 are included. Thank you, Mr. Cole. So months 1 to 10, each month the unit the unit sales demand is 190. So that means if you have 10 months here to have the number of units under this band, it has to be 10 times this much, okay, like that. So unit variable costs are expected to be as follows, okay? So the first 1,900 units is 50 per unit. The next 11,500 units is 40 per unit, and the next 30,000 and next 30,000, 30 and 25 respectively, and thereafter 30. Okay, so this works in a similar way with the way NAWEC does their tariff. If you understand, like the water, you know, they have bands. If you consume between this and that, the unit is this. If you consume between that and that, like that. So if some of you are familiar with the way NAWEC does their pricing, especially it's in fact both electricity and water. So it's the same way that we are talking of here. Okay, so CAMS company operates a JIT purchasing and production system and operates its business on a cost basis. You know a JIT, a just-in-time approach? What is a JIT? Of course, it's just in time, but what does it mean? Have you ever come across JIT in your earlier studies? Just-in-time approach to stock control. Just in time. Abdullah Danso.
Yes, mister.
Okay, Mohammed, yes. Mohammed, you want to try. What is JIT? Have you ever come across it before?
Yeah, I saw it a couple of days ago while I was reading.
Good. What does it mean?
Yeah, I can grasp it 100%, but then I think the idea is like it's just a strategy that, for example, producers use in such a way that they will not go like out of stock.
You will not go out of stock. That's one. And two, you will not keep stock unnecessarily. Very good. So two things. The JIT approach to production will enable producers not to go out of stock and also not to keep a lot of stock. You know, stock costs a lot of money. You know what I'm talking about? Stock costs a lot of money. The purchase cost, not only the purchase cost, of course, the maintenance cost. You have to keep stock somewhere. You have to keep it in a warehouse. If you keep it for too long, it can get damaged, and it's very expensive when it's damaged. That means you are losing. So the JIT approach is a modern technology that most countries are using in the West. Okay, production companies. So they don't keep stock of things that they don't need. A typical example is, for example, if you're in the UK, you order a laptop. Okay, you order a laptop. You know, it's not likely that you just go to the manufacturer will not just go and pick a laptop and send it to you. No, they operate on a JIT approach. So if you send a if you send a request to purchase a laptop, say online, let's say you want to buy a Dell laptop, because I have experienced this firsthand when I bought my first laptop, okay, in the UK. So I send an order. They will say, okay, the order will be delivered to you between 3 to 5 working days. Okay, so what they do is, when you place an order, they will also place an order to, you know, get the various parts. You know, laptop has got various, the motherboard, the mouse, the this, the that. So they will also place an order to, you know, get those stock together, and then they will assemble it. So once they assemble it, they will ship it to you. It will be there just like they've already said it. So this is the approach most organizations use in production. Because if you buy all those stock of parts of laptop and so on and so forth, and you keep them, they might get damaged. And if you keep them, and in case customers don't buy them, you're going to lose, because you cannot go back to the manufacturer of those parts and say, I'm going to return them, give me my money back. No, they will not accept that. Okay, so JIT approach is very, very, very important. Good. So required, explain each stage in the life cycle of the Fentiga and the issues that the management team will need to consider at each stage. Okay? Your answer should include a diagram to illustrate the product life cycle of the Fentiga. Okay, so your answer should depict a diagram. So just like the diagram we have seen, so when you are answering, we're going to discuss this briefly. I'm going to provide you with the model answer, but obviously from our previous discussions, you've got almost all the answers. And look at it, it is 12 marks. Compared to the calculation, the calculation is only 8 marks. So be careful. And getting these 12 marks is a lot easier than getting the 8 marks. Okay? And please take note in an exam, if you are going to get 12 marks, please take note that you must have at least, you must make at least 24 sensible points. Do you understand? This is the way exams goes, professional exams for that matter. If you have to get 12 marks, get ready to make at least 24 sensible points. Sensible points. 12 marks is not easy to get. Okay? So each of the mark you get, at least get ready that you will get 2 solid points for each mark with examples where applicable. Am I making sense? And in a question like this, they have given you a case, they have given you a scenario. The scenario relates to an organization called CAMS Company Limited, who deals in what? A product called Fentiga. So when you are answering this question, you have to think like you are an employee of CAMS Company. Okay? You have to think like you are an employee of CAMS Company. Okay? And use the data that is provided in the case. Very, very, very important. It's not a question of, giving your answer, your theoretical answer, all the knowledge that you got, based on the product life cycle, developments that you mentioned. No, that's not going to earn you all the marks. If you state those stages, you explain them without making reference to CAMS Company, you might not get even half of the marks. Okay, so please take note of that. Please take note of that. Okay, and of course, this particular one is easy to answer it, because when you look at your question, you'll see to it that there are things that will tell you which stage the product can be. Okay. So let's go, let's try to discuss the A part. So explain each stage in the life cycle of the Fentiga and the issues that the management team will need to consider at each stage. So what will be the first stage? What will be the first stage? As we have discussed on the product life cycle, what will be the first stage?
R&D.
Development stage. The development stage.
Okay, so the first stage will be the development stage. When we look at this scenario, when we look at the case, do we have any information that tells us anything about the development stage? So of course, when you mention development stage, what will you have to explain what's development stage? This is the stage whereby the product or the services undergoes development, undergoes research, and so on. So you have to say that, and then you try to apply it here. So that's the most important. Look at the first paragraph of the question. It says, CAMS Company is an innovative, high technology company which has recently completed the development and testing of a new product, the Fentiga. The development of the product has cost $500,000, and the company has also bought a machine to produce a new product called $175,000. The production machine is capable of producing 1,500 units of Fentiga per month, and is expected to have a residual. It's not expected to have a residual value because of its specialized nature. So, what information can we use here in our answer of the development stage? Can we use any information from the first paragraph in our answer?
Yes, the development of the product has cost 500,000.
Okay, so after describing the development stage, like we've discussed, you can go ahead and say, in the case of CAMS company, the development of the product, you could even say the R&D, the research and development has cost what 500,000, and also they bought a machine for 175. So you can say all this happened at the development stage. Everything was cost. So you can even go ahead and add these two and say, so total cost at development stage was 675,000, and there is no sales revenue. Boom, once you say that, the examiner is happy, he's going to give you full marks on that stage. Okay, so that's the way you answer professional exam questions. Then what is the next stage? After development stage, what is the next stage?
Introduction.
Growth. Introduction.
Hey. After development stage, growth.
Introduction.
Introduction.
Introduction. That's the launching.
Or launching.
Introduction stage. Okay. So let's look at our question. What can tell us from the data provided? What can tell us that? What can signal an introduction stage here? Okay, so naturally, the introduction stage is going to happen between week periods. It will be between week periods.
Between development and growth.
No, week periods, as per the question. We are trying to apply, please. You know, accountants, we are different from historians. We should not start talking. You know, in exams, in history question, you can start, like if they ask you about Mali Empire, you start describing about Mali Empire, then in the middle, you can put in anything, because they might not, you know, look at it. But in our own case, it's different. You have to talk less or write less and bring in a lot of substance. This is why a lot of people fail in exams. You'll say, oh, but the way I answered this question, I cannot get it right. But what have you answered? Maybe you are just beating about the bush. Okay, so you just take short sentences, mention facts, and then try to make reference to the question, make reference to the case. So here, week period tells us that it's development stage. Sorry, it's launching stage.
The first 10.
The first 10 months. Okay,
First 10 months.
Okay, and you know, you have this one, you have to have common sense. Okay, so between months 1 and 10, look at the sales demand. Is it not the lowest?
Yeah, it's the lowest. It's around
It's
190.
190 per month. So mention that. Okay, so you mention that. And then, of course, you can mention something else. At this stage, there are a lot of costs regarding promotions. Advertisement, billboards, this, that. You mention it, the examiner is more than happy to give you full marks. So what's the start stage? Growth. Okay, the third stage is growth, isn't it? Okay, from the scenario here, what can show us that growth is going to happen? Week periods?
The next
Week period.
18 months after
From the month 11 to 30.
the next 18 months after introduction.
Sorry, say that again?
It's from 11 to
I said
17.
the next 18 months after introduction.
In fact, growth is going to happen
70.
from 11 to 17.
11.
Look at it. Look at how. Look at. Yeah. Look at it. Introduction. Look at it. Look at it. The sales demand per month. You know, please, when we are talking about product life cycle, all these stages are measured according to sales demand. Okay. Look at sales demand has gone up from 300 to 850. Is that not a big a big jump from 190 units per month to 300 units per month, from 300 units per month to 850 units per month, from 850 units per month to 1,500 units per month. So the growth period is between month 11 to month 70. Can you see? Can you see? So you mentioned that, and of course you also mentioned that it's during this period that high sales revenue will be recorded, and of course profitability will also go up. Then the next stage is what? Maturity, isn't it? So now look at it. So as at the end of period 70, the product will reach maturity. Look at it. Because after that, look at what has happened. The decline stage will happen. So you see, look at it. From 1,500 sales unit per month to 900, and it's declining to 700, to 450, to 300, and nil. Okay? So this is the way to answer a question like this. Make reference to the case, and then your facts together. Okay? So we're going to move to the B part of the question. We're going to move to the B part. Yes, yes, go ahead if you have any questions. Yes.
Yeah, can you go back to the figures there?
Yes.
I think the growth stage should stop at 30, not 70, because the maturity stage will start at 70.
Yes, yes, you're right. Sorry. Yeah, the growth stage will start actually from month 11 to month 30. Yes, you're right. So month 31 to 70 will be the maturity stage. Yes, you're right. Okay, so that's correct. So months 31 to 70 will be maturity, and after that, from month 71 onwards, will be decline. Okay, good. Okay, so I think we should go on with the B part. That's the part the accountants like, number crunching. Okay, the part that accountants like.